Okay, everybody, it's me, Gregory Mannarino. It is Friday, January 14th, 2022. Right off the bat, let's start off with this. We just got retail sales numbers which were nothing short of, well, I don't know another word, unbelievably abysmal. As a matter of fact, they were so bad that there's already talk about is a Fed rate hike off the table. These retail numbers, I'm going to read to you in just a second, were even worse than I would have expected. And you know me, I've been telling you that this economy is in free fall. I don't know what other proof we need here. Let's talk about this epic, absolutely freaking epic. First of all, import prices rise 10.4% last month. 10.4%. Guess who's paying for that? You are. Let us move forward here. Online retail sales last month cratered more than 8%. It's unbelievable. In aggregate, in-store retail sales fell 1.9% versus, the rocket scientist economists. They thought it was just going to be a fractional loss of 0.1. I mean, you want to talk about an epic miss? Minus autos or cars, retail sales fell 2.5%. I mean, these numbers couldn't be worse. And honestly, worse than I even thought. That's where we stand right now. Couple of other things going on. One is, I think, very good news for my Lions, myself actually. Over the past 2 weeks, I have sent out notices in my free newsletter, link in the description of this video, to my Lions about the banks. I said, wait for a pullback, watch for a pullback. I'm expecting a pullback. Well, it looks like we're getting that right freaking now. I told you to keep some powder dry. Let me explain to you what I will be doing. Right at the opening bell, I will be buying the dips in the banks, which I recommend to all of you who do follow my newsletter. As a matter of fact, right after this video, I'm going to fire out a little letter to all of you about the banks, specific banks, which I think most of you know already here. But this is a major, massive opportunity that we have been waiting for, and it's in our freaking face. I love that. 2 weeks, I'm telling you, watch for this. Watch. Boom. Now we get it, and we're going to pounce. We're going to pounce hard, me and my Lions. All right. Anyway, so on the back of really, people, I don't know another way to put this, retail sales numbers across the board and import price numbers, which couldn't be worse. It's impossible, I think, in my opinion, for these numbers to be worse. So the talk is going to be this. So just listen for it. The mainstream media is going to be, fist feeding you the nonsense. These numbers were so bad, maybe a Fed rate hike is off the table. No, a Fed rate hike is not off the table. It's going to happen, and it's going to be meaningless, okay? It's not going to affect a damn thing, in my opinion here. As I have said a gazillion times, the Fed really doesn't care about surging inflation whatsoever. Their goal is to inflate. I've explained to you since forever now, they're going to inflate some more. And so they're not done by a long shot here. And look, to me, again, people, we have to see through the dog shit and just recognize where the opportunities are. Talking about that, let us move forward here. So on top of what looks like a nice pullback here for the banks, stock futures are lower across the board. NASDAQ futures, or tech especially, I still see insane opportunities moving forward in tech. I still think we should be nibbling here with regard to the tech sector. It's going to rebound, and it's going to rebound in a big way, in my opinion. Let's look at why. The drivers of the market, remain stable. The debt market, there's not a single red flag anywhere. 10-year yield stable right now. MMRI lower. Dollar flat this morning. Yield curve looking pretty good. Good. Let the market do this. Again, markets don't always just go straight up. You know, it's a random walk with an upward drift here. Sometimes we consolidate for a little while. I explained to you that we were going to see a lot of volatility in the market this year. One of my top trends for 2022. If you haven't seen that video, please go look at that. So stock futures are pointing towards a lower open across the board, not just the banks. And to me, people, look, I'm going to tell you this again, buy the dips in everything, in every freaking thing, because the easy money is not going to stop, along with the bad economic news. And today's was pretty much off the freaking Richter scale. Let's move on. Cryptocurrencies right now, relatively flat, maybe slightly lower. Gold and silver mixed, about at the flat line. Crude oil, still around, WTI is still around $81 a barrel. So the setup isn't bad. It's not bad. But volatility in the market, you're going to get it for a myriad of reasons here. I believe this. Until the Fed actually makes their first move with regard to hiking rates, you're going to see a lot more volatility in the market. But again, keep your eyes on that 10-year yield. Watch the MMRI. MMRI is still, yes, in moderate risk territory, but I don't see a red flag anywhere, people. And I want us to, again, ignore the nonsense, the propaganda, the bullshit, because we know exactly what's going to happen. We know why it's happening. We're in an economic meltdown. It couldn't be worse. I mean, really, it couldn't. And today's retail numbers prove that yet again. I don't know how many people need more proof that this is over, that the economy is done. And the more we hear the opposite from our politicians, from our retard president, from the propaganda ministry telling us how great everything is, and then we get numbers like this, it's insane. Again, it's all a distraction. It's an insane deception. And that, again, is something that's really taken off. And I said it would. I think we all expected this. You got, again, yesterday, all day long, the mainstream media channels pushing the narrative that the Fed is going to be raising rates aggressively and that's going to slow down inflation. No way. Absolutely not. It's not going to happen. But that's the narrative. It's the distraction. It's look here, don't look over here. The fact of the matter is we haven't seen anything. And I mean, we're not even close to seeing the meltdown of this economy. It's going to continue that way. You know, it's an interesting narrative. I want to just bring this to your attention. Do you remember when moronic, Omicron first came out? There were the medical professionals who actually know what's going on trying to explain to you, oh, this is really not such a bad variant. But all of a sudden they got pounded on by the mainstream media. Oh, no. Oh, no. It's going to be really, really bad, blah, blah, blah. They had to keep that narrative going so they can allow more control, more fear to be instituted, because that's what this is all about. Fear is control. And believe me, once this particular variant runs its course, they're going to introduce another one to keep the fear factor as high as they possibly can. So another part of the distraction. Stay focused on being afraid of this thing, and you will not realize that the economy is crumbling around you, that central banks continue to inflate on a massive scale. Really unlike anything we've ever seen. That the economic news is... It's just terrible. Ignore the fact that we're really in the middle of a wipeout of the entire middle class. They're going extinct. They're literally going extinct. I hate it. And people are being made to deliberately suffer, having to pay this unbelievable inflation tax in the face of cratering retail sales. And cratering everything else. I mean, there's nothing good. There's not a single light on the horizon which will tell us that this economic disaster freak show is going to turn around. It's only going to get worse and worse and worse. There's no stopping it. And it's getting worse by design. Keep the economy shut down. Allow central banks to finish what they started, to become the lender and buyer of last resort, to own it all. That's the goal. Period. The freaking end. And you all know that. Anyway, people, so that's really it. So, while I got you here real quick, let me just see what stock futures look like. Futures are lower across the board. Actually, crude's getting a bit higher. How's that? We got a turnaround here in WTI. It's now over $82 a barrel. What else is happening around here? You got cryptocurrencies here, which are under a little bit of pressure. Gold a little higher. Silver down 0.4%. 10-year yield looking stable. Dollar slightly higher. Anyway, take advantage of what you are seeing, people. I don't know another way to put it. And like I said, if you're one of my lions, right after I finish this video, you should be checking your email box. I'm gonna send you something about the banks here, which is no surprise because you knew this pullback was coming from about 2 weeks ago. I told you to look for it. I told you to keep some powder dry. And here is our opportunity to freaking pounce. You understand? If, in fact, you have not subscribed to my free newsletter, what the hell are you waiting for? There is a link in the description of this video. Check the MMRI. Keep your eyes on that. Let's see what happens with the MMRI today. I'm very curious myself. I'll be honest with you. Is it going to drop? Is it going to go higher? Is it going to stay about flat? Well, we'll find out. I'm out of here. Love you a lot, and I will see you later.